What's going on, you guys? My name is Zach Hartley, and over the last year, there have been several short seller reports that have come out and targeted specific companies. So in this video, I want to break down for you what is a short seller report and what impact does it have on the company's stock price once that report comes out. We're going to look at 4 different examples in this video, and I'm also going to give you my strategy for what to do if you're holding a stock that has a short seller report or if you want to trade on these short seller reports. I'm going to give you everything you need to know. Let's go. Okay, so what is a short seller report? Let's just start there, and it's very simple. A short seller report is a report, a physical paper document, usually paper document, or it's posted to a website, but it's usually 30 to 150 pages long, and it is a detailed report about why a company is either overvalued or how they've been lying to investors or how their technology doesn't work. It's basically a report that tries to give as much evidence as possible about basically why the company is one big fraud. Now, these reports get issued either by a company or a small group of people that are going out there and trying to do research on these companies. They're trying to find fraudulent companies, do the research on them, and then these companies that are publishing the reports will actually take a short position before the report goes public. And so when the report goes public, if people believe the report and if there's actual evidence in that report, the share price will usually go down, and the people that wrote these reports will usually make money because they're holding short positions. So as you can imagine, this is a very controversial topic. You are going out there and you are trying to bring down a company because hopefully you believe that it's actually a fraud. But in doing that, you're usually hurting a lot of people because they're usually holding the shares, and then when those shares fall in value, they're losing money. And so this is a fairly controversial topic. A lot of people look down on short sellers, but at the same time, they also do a fairly important job in the marketplace of holding people accountable and calling out the fraudulent companies. And so you can definitely see the benefits and drawbacks of this entire concept. Now, when it comes down to examples, I've pulled kind of the 4 biggest examples that I can think of over the last year. The largest of them probably being Nikola. You've probably heard of Nikola rolling a semi-truck down a hill and saying that it was powered. Well, that was part of the short report, and so we're going to talk about that here in this video, but we're also going to look at other examples, including NIO, EHang, and Scape. So let's just start with Nikola. This came out from a company called Hindenburg Research. You can find the report if you go to their website /Nikola, and it's really interesting. This was a fairly long report, and it goes through, and as you can see, here's the little scroll bar right here, and it goes all the way down. It's a fairly long report, and it basically says Nikola's technology isn't where they say it is, and they're rolling trucks down the hill and saying that they're powered for publicity and for investors. And basically they called out Nikola, and what turns out is that most of the report was right. They were rolling a truck down the hill. It was not powered under its own power, and there were some major issues that this report brought to light, and the impact that it had on Nikola stock was actually pretty tremendous. So Nikola actually hit a high of $54, and then the report came out right here, right around this $40 mark, and as you can see, after that report, the stock took a pretty big tumble, going all the way down to $9.37. It actually had a pretty good recovery, going back up to $20, and then it did come back down to $10, currently trading at $10.40 right now. And so this report was actually fairly accurate. They definitely had some things correct in the report, and it has made a major impact on the share price, basically cutting Nikola's share price by about 75%. So you can obviously see the impact that these reports can have. Now, the next one that I want to point out to you came to another basically vehicle company. This was NIO. This is the Chinese car company called NIO that's basically Tesla's probably closest competitor right now, and this was published by Citron Research on November 13th of 2020. And basically what this report says is that NIO has no idea what they're doing, especially when it comes to price and manufacturing. And so this report came out on the 13th. If you want to do your own due diligence and check out the report, here's the link to it. I will also put the link in the description to this video, but here is what the chart looks like. And so this report actually came out here on November 13th, 2020, right around here at this sort of $40 to $45 range. And as you can see, it was fairly choppy trading after that. There was a small dip as soon as the report came out, and then it actually rose up higher within 2 weeks, and then it came back down and then set all-time highs at around $66, $67 right here. And then since then, it has come back down to this $30, $35 level and pretty much traded sideways. And so when we look at NIO, since the report came out almost a year ago, the stock has pretty much traded sideways. It has set higher highs and lower lows since the report came out, and it's currently trading pretty much at the exact same level. So I would classify this as pretty much trading sideways since the report came out. So not as big of an impact when we look at NIO compared to Nikola. That probably comes down to the quality of the company and the justification behind the report. Maybe the report was a little bit weaker compared to the Nikola report. Honestly, it probably was, because Nikola was rolling a truck down the hill with no power. So I don't know if you can get much worse than that. And so that's probably one of the reasons that Nikola fell so much compared to NIO. Now, another big short report that came out earlier this year was actually for EHang, and I was very, very invested in the drone delivery and the drone marketplace. There was actually another drone stock that had a short report that came out fairly similar timing to this one, and it had a pretty big impact on the stock, but not quite as big as EHang. So I wanted to share this one with you. This one came out from a company called Wolfpack Research, came out on February 16th of 2021. Here is the link to it right here, and you can see the title here, EHang, a stock promotion destined to crash and burn. So obviously not very optimistic about the stock, and basically what this report said is that all of their manufacturing is a lie, all of the video promotion is a lie, they don't actually have any operational units, and the motors that they are using are actually like hobby shop off the shelf motors that they haven't even developed themselves. And so it was a very scathing report. They made a lot of accusations in this report, and it was very, very heavy, and it had a very large impact on the stock. As you can see, in one single day here, the stock opened at $129 and it closed at about $45, maybe $50 right here in a matter of just one day when this report came out. And so as you can imagine, a very, very substantial reaction to this report. And since then, the stock actually traded all the way down to $19.75, and it's currently trading at around $30 right now. And so this report brought this stock down from $129 all the way down to $30 about 6 to 8 months later. And so absolutely massive impact, drastic impact, and very, very scary if you were an EHang shareholder when this report came out. Now, the last report that I want to share with you actually came out just a few months ago on April 15th, 2021. This is for a company called Scape. They're developing solid-state batteries. They actually have investments from Bill Gates, and they have racked up a whole lot of attention in the 6 months leading up to their highs. And then just as the stock sort of hit its high, this report came out from a company called Scorpion Capital. Here's a link to it right here if you want to check it out. And they say that Scape is a pump and dump SPAC scam by Silicon Valley celebrities that makes Theranos, which is another basically complete scam, one of the largest in history. And they are saying that Scape makes Theranos look like amateurs. Theranos was one of the largest scams that has ever come out of the basically stock exchange, and it was a major, major issue. I forget what Elizabeth something, I forget what her name was, but she really, really royally messed up Theranos, and these guys are saying that Scape is pretty much the same thing. And so when you look at the stock chart for Scape, as you can see, they hit highs of $65 right here, and then the stock started trading lower. It actually started trading around $35 when the report came out on April 15th, and immediately the next 2, 3, 4 days following the report, the stock fell by another kind of 10 to 15%. It actually then rallied back to an even higher level before coming all the way back down to $21. And so this report came out on April 15th, and within a few months, the stock was down by about 30 to 35%. And so I would call this kind of a medium impact. It's tough to say how much impact the report had on this stock price because it was already falling from the highs, but definitely not a good sign. And it is down, let's call it 30 to 40% from when the report came out. So as you can see here, these reports can have very, very dramatic results and dramatic impacts on the share price, or on the other side, sometimes they don't even affect the share price, like what happened with NIO. It's pretty much been trading sideways since then, and it has set higher highs since the report came out. And so it definitely goes both ways here. Sometimes it has a massive impact, sometimes it doesn't have a huge impact. It really depends on how good is the company and how kind of loyal is that shareholder base and how much do they believe in the company versus how compelling is the evidence in that report and how convincing is that report in total, as well as the history of that agency. And so the real question here is, what do you do if you have a position, and then what do you do if you want to trade on these reports? So let's dive into what to do if you have a position. Number one, when I realized that one of the shares that I owned, UAVS, company called Egg Eagle, they had a short report that came out on them roughly around the same time that EHang had their short report. The first thing that I did is I put a stop loss just below technical support on the stock chart for the daily chart. And what that allowed me to do is make sure that if this stock crashed any further, I was going to get out of it, I was going to be clean, and then I had the opportunity to buy back in later if I wanted to. But it also meant that I was protected in the event that more and more people started to agree with this report. And so the first thing that I did was I put a stop loss on my position. The next thing that I did is I went out and I tried to read the report, and I asked myself, do they make any valid points, and do I think that they are correct about their justification for the company either being a fraud or overvalued or lying to shareholders? Whatever they're accusing the company of, do I think they're correct, and do they make any valid points that I need to acknowledge? And if the answer to that is yes, then you probably should sell the stock anyways, because you need to reevaluate your analysis. But if the answer to that is no, then you might want to do a little bit more research on the company that came out with the report, because all of these companies are issuing all of their reports to the public, which means you can see how well they've done in the past. And if this company is 0 for 5 and all the stocks that they write short reports about are now up, then you can just blow it away. You don't even have to worry about it, and I wouldn't even consider doing any more research or due diligence on it. However, if that company is really good at these short reports and they've got a history of success, and you go through the last 3 reports that they wrote and all of those stocks were complete frauds, and now they're calling your stock a fraud, well, that's maybe something you should do a little bit more due diligence on. You should be a little bit more careful, and you should dive into it a little bit more, because usually when somebody goes through the hassle of writing a 30 to 150 page report, there's usually a reason that they're trying to do it. And honestly, they have to convince everybody else of that reason in order for them to make any money, because if that price goes up, then they get short squeezed. And so it's a very, very interesting dynamic. But if you have a position, number one thing you should do is set a stop loss. Number 2 is read the report. And number 3 is research the company that wrote the report. Now, if you plan on trading any of these short sell reports, you have a couple different options here. Number 1 is you can short sell the stock, or number 2, what I like to do is I like to buy the put options. Gives me a little bit higher risk to reward ratio without giving me that unlimited risk caused by a short squeeze. Now, I personally think there's a great opportunity here to day trade these ones on the day that the report comes out, because you're going to have tons of volume, tons of liquidity. You're probably going to have a huge opportunity to sell to the short side. Now, if you're a swing trader, or you like a little bit more long-term trading, or you're just not a day trader, then what I would recommend is looking at these stocks, and if you agree with the short sell report and you think that stock is going to go down after you've done your analysis, then I would either short sell the stock or buy the put options, and I would plan to sell that trade or exit that trade in about a 4-day time period. Because if you look at all of our charts, what you will notice is that within 4 days of the report coming out, all 4 of these charts had dropped. All 4 of the stock prices had declined in the 4 days following that report. Some of them went up, some of them went down over time, but all 4 of them declined in the 4 days following that report. So if I'm going to swing trade these short selling reports, I want to get into the position on the day that the report came out, and I probably want to exit that position 3 to 4 days later based on the analysis that I have done and the cases that I've looked at previously. Now, if you're interested in getting into trading and setting up an account and getting charts just like what I showed you here on this presentation, then definitely check out Questrade. That is the platform that I use to day trade and invest all of my money, and if you use the link down below, you'll get $50 in free commission, so you can try out the platform, make your first couple trades, and it won't cost you a single thing. I promise you, if you're serious about trading, Questrade is much better than any of the other applications you'll find like Wealthsimple. This is what the professionals use, and this is what real investors use, so I highly recommend it, and it's the platform that I use every single day. Now, if you're interested in learning how to invest and what stocks to buy and sell and how to understand the charts and the financials, then definitely consider signing up for my Stock Market Fundamentals course. It is completely free, and it's hosted on Skillshare, where you can get access to the entire platform for 2 weeks when you sign up with the link in the description to this video. That's going to give you access to my entire Stock Market Fundamentals course, which is 9 hours long and has over 7,000 students that have already gone through the course. There's over 300 reviews for you to take a read through, and I promise you it'll be the best free resource that you can find online. It's completely free. The link is in the description down below, and all I want to do is share it with you. Now, if you get any value out of this video, remember to click that like and subscribe button. Good luck trading, good luck investing, good luck with your short selling reports, and I will see you guys in the next video. Talk to you soon.